Welcome to the indices, and here we're looking at the US notes, and we'd been looking at these, and one of the important points here was the 125 being a resistance and also the end of a wave count as well. And what we're seeing here is we're seeing 1, 2, 3, 4, 5 to the downside, so we should see a rally and then further downside, which will support the stocks moving up, and that's what we've been looking for and waiting for. And this was a bit of a catalyst, seeing, understanding there was going to be resistance here and there'll be some sort of reaction, but we can't see past having 5 here, 3 here, and 5 here. It could go another 5 as well, but that's as far as we can see. But for the time being, that's good. So moving on to the actual indices here, looking at the S&P 500 on a 4-hour chart here, just to get a larger sort of picture here. Look, what we noticed in the day ahead report here was that this here was in 3 waves. It was corrective. All this has been quite messy, really, but we could see 3 waves here. So we're looking for it to push up as well, and we're looking at 3 waves coming back in here to the 1860 area here we had it pegged at, but stay within group 2, which is meaning that it's strong. And now it's pushing higher. Now, of course, the Dow Jones actually has made a high above this previous high over here. The S&P is yet to do that, but it should tag along and do that eventually. But obviously that 1900 there is going to be some type of, resistance, and we'll see some type of, corrective price activity there, and expecting small 3-wave sort of structure across that, and then sort of finding support on that, and then pushing higher from that as well. So we're looking at a stronger move to the upside here, and we could call all of this here, this 5-wave structure here, we could call all of this wave 1 and wave 2 back to here, and then building stronger up here. So if you've added on to 1880 here, or you've got positions in here, 1880, keep the stop under here, or you could bring it up to here, and look to add on top of 1900 here, and we'll try and build a longer trade to the upside. And we've been doing that with the Dow Jones because it was finding support on the 16,500, which is the medium level. And once again, we're looking to add on 1660, look to add on 16,700. The Dow works to every 100 points, of course, so you either trade to the 100 points and get out, wait for support, and then move back in. But in this case, because we're trending, you might as well just continue to add on every 100 points. Now, the 16.8 here, the 8's going to give a larger correction here. So you would need to leave the stops at, I did write them down here, that would have been 16,646. So we'll have to leave the stop there, until we find support on 16.8 there. So yeah, the FTSE as well. Look, we've had long positions in this for a while. Yesterday we were looking to add at 68.30. I should have pointed out to add at 68.50, but you should know that already. That's the midpoint. So this here, we're basically looking for up for 1, back for 2. The 3rd wave will take us up into the high here around 16.9 up here, and we'll continue to move up higher. But have a look at the text anyway, and you'll see where to put the stops and where to add and so forth. The Australian market, well, it hasn't moved much. Look, she's a bit sluggish, and that's, we've got Smoke and Joe with these numbers coming out today. So, I don't know what's going to come out of the gates there. So, they're preparing for bad news here, obviously. But look, I think that our market, the news won't be so bad, I guess, and they'll turn out to be good guys at the end of the day, and our market will play catch up. So be prepared for that. As currently as it stands at the moment, this pattern that we're looking at here we've got it down as being positive, but it could turn bearish if it took these lows out. Well, technically this low here, so a move below that would send us into another, leg to the downside. But as it stands, we've got 5 waves up through here, and we were looking for a 61.8 retracement level back, which is somewhere in amongst all of this here. And then, we noticed that this here appeared to be an impulse wave to the upside, and this move here was corrective, and we were looking at that yesterday, and we'll go in and have a look at that now. But just before we do, I was kind of looking at this as the A, the B, and the C here of this correction here, and then this up for 1 here, back for 2, and looking for a third wave up here, taking these highs out here. Of course, 5.5 is the strongest number in that little area there, and while the market is below that, it's got a bias of weakness to it. So, and above that would be strength, and the aim here would be to be gleaning small positions, in this current structure up to here. And once this does find support on here, then you can shovel in a bit more from that point. But just drilling into this a little bit through here, yesterday, yesterday we were looking for, I think we're in here somewhere, and we were looking for the market to push up and cover this little gap in here, which it did quite successfully, and then it sold off. But it didn't take this low out here, so not that it mattered that much either, actually. But it's just another little sign of strength, and the idea of adding on 50 and all through group 2 here would be the aim. So look, I just think this will just keep building slowly to the upside there, but treading on water, so the volume will be sort of lighter. I guess the commercials will be looking to buy on pullback. So gleaning some small positions here, but you're not safe until the 5.5 becomes the tested support. One of the other main things here too, of course, the budget and the budgies are going to, it really affects the sort of finance sector the most, I guess. But the base metals are strong overnight. The copper market made highs above 310, which we were looking for it to prove to us to be positive, and that's the case. So, and it will continue to climb higher. So in the UK, it was the mining sector that that pulled the market to the upside, and it's likely that we're going to be doing that today as well. This little structure starting off through here it's got the makings of being an impulse wave to the upside, because there's no overlapping wave structures apart from in the beginning here. But this is that's fine as it stands at waves 1s and 2s, but this is all stretching out quite well now. So we could look at the mining stocks being one of the leaders today. So sure, they could gap on the open, but there's still more legs in them. That's what I'm trying to say. The copper will find support vibrate at 315 and then move up to 320. And moving up to 320 in the bigger picture, in sort of weekly continuous charting with copper, puts it into another bullish mode as well, because there's about 12 degrees of structure in charts or patterns, and it just at 320 it breaks another one into a bullish pattern as well. So some strength there, and it can come off the mine. So it's good if you've got mining or resources and finance moving together when you're trading the indices, because then it really stretches out. If you've got one going up and one going down, then you got this sort of hard place in a rock. So it'll be interesting to see what comes out of the budget, and if it's not so bad, and being a bit positive. And we're looking at CBA yesterday, and that broke a little bit higher as well. Still sort of sitting at the 80, but potentially got space to move higher. So we may find that the mining and the resource and the banking will be on the same page, and that will push these resources up quite swiftly to do a little bit of catching up, so to speak. All right, cheers.